Hello, everybody, and welcome. Thank you for joining us tonight. My name is Nicole Fisher, and Jerry Robinson is also here with me. And we are here to talk to you tonight about investing in Florida. Jerry is one of our awesome Florida agents, and he's going to be diving into the details of the market. But before I hand it over to him, I just wanted to introduce Marshall Reddick and explain a little more about what we do and how we're different for those of you that may have not worked with us before. And also, just as a heads up, before when we get to the end, we're not going to do a live Q&A session, but if you have any questions along the way, you can type them into the control panel, the chat box of the control panel, and I'll get those. And then I'll go ahead and follow up with you directly via email to make sure that you get your questions answered. So it looks like, we already moved on to the first slide. So we are Marshall Reddick. We have four main lines of business here. You can see we have our brokerages, we have property management, we're also private money lending, and we also have an investment fund. For the brokerage, we have a very large presence here in California, but we also cover out-of-state markets as well. We do primary residences and investment properties. And what really sets us apart from other brokerages is we're a one-stop shop for real estate investors. We help you all along the way, connecting you with everybody you need to help you with the process and the transaction so that you can have a really smooth out-of-state investment that can be as passive for you as possible. So we do the property management as well in some of our best markets. And then we do private lending, and we have two sides here. We have borrowers, and those are people looking to do fix and flips or buy a property with a self-directed IRA. And then we have lenders who are investors that loan out mortgages. And then again, for a more hands-off approach, we have our investment fund. And then kind of circling back to the property management, we do the property management as well. And that's another thing that really sets us apart, because our whole goal for property managing is really to keep our investors happy and really be accountable to you after the home sale and standing by you along the rest of the way, because the home purchase is just the beginning. And so we really want to, be with you for the whole process, and again, just make the investment as passive and hands-off for you as it can possibly be. Let's go to the next slide. There we go. This is me. I'm Nicole Fisher. I actually started with Marshall Reddick as an advisor myself. My first career was actually in finance and accounting. I'm a licensed CPA, although I'm not active anymore. And I worked at KPMG in corporate finance and audit, and did a lot of the big tech companies here in the Bay Area of California. That's where I'm located. And I bought my first investment properties out of state through Marshall Reddick. I was always interested in real estate investing, all throughout my career in finance, and I actually discovered Marshall Reddick at a meetup myself. And after hearing the presentation, I totally found the right place for me to do my investing and bought my first properties. And then I did other investing through other different connections I had, but my best properties were the ones that I had bought through Marshall Reddick. And so after years as a client and an investor, I had two little girls and was kind of ready for a career change. And now I work at Marshall Reddick, and I love this role. I'm an advisor here, and I basically, help people do what I did. And that's my role, is basically to talk with new investors and explain the process and connect you with all the people that you need, and just, help you do what I did. And yeah, and so that's my role here. And then I'll go to the next slide. My button doesn't seem to be working. There we go. So here are our markets. We're in 16 different markets across the country. And the ones in the little green boxes are the ones that we actually have our own brick and mortar Marshall Reddick office as well. And so where we do cover the property management. And this kind of explains, how did we choose those markets? How did we get into those markets? It wasn't just, that we already happened to have offices there. We actually found those using these 7 criteria. We look at job market, vacancy rate, economic diversity. So, these aren't cities where there's just, one business that's supporting everything. They're very diverse. The economy is very strong so that if there's, a dip in any one of them, it doesn't bring the whole area down. We look at housing affordability. Is the state landlord friendly? If you're in California like me, then you know that I personally don't want to own any rental property in California. But the states that we operate in, the laws are much more landlord friendly. We also look for areas with strong education. Again, we're going back to that economic diversity, as many different industries and things going on. They just help keep the area strong even when we have downturns. And then again, areas that have reliable property management. So now we do have Marshall Reddick in several of those markets, but managing the property after you purchase it is, the most important part. And here is Jerry.
Hey everybody, yeah, you guys can hear me, I hope. Good. Okay.
I can.
Oh, perfect. All right. So my name is Jerry Robinson. I'm actually a realtor, broker associate down here in Florida. My role down here is for Marshall Reddick is to help our investors, our clients find properties depending on what they're looking for. That can be in commercial, residential, land banking, couple of different options. So I'm a licensed Florida realtor. I've been licensed since 2015. I'm also a licensed Florida real estate instructor. I picked that up so I could kind of teach the next generation of realtors that are in the area. It also keeps me up to date on everything that's going in. I actually started in investment real estate in 2009, managing properties up and down the Eastern Seaboard. Had about 6,000 doors under me and a property management team that handled those. So I've kind of always been involved in the investment side of it, right, in the rental market. My biggest focus for a lot of my clientele, a lot of the people that I deal with in the investment side, is obviously acquiring properties that are going to cash flow, that are going to appreciate in some of our markets that are around here. Knowing when it's time to liquidate those and maybe move to one of our other markets that we're in. I also have a great relationship with our property management team that's in-house. So they help to keep me honest as well. If I sell a bad property, I would hear all about it and probably would not make it very long with Marshall Reddick. My specialty again is in multifamily, as well as commercial property management sales within our area of Southwest Florida. If anybody's looked at a map yet and kind of looked at where we handle, it's pretty much everything up from Lee County, Charlotte County, and into Collier County as well. So most people know the Naples market on that side, and then you get into the Port Charlotte, Punta Gorda, which is a little bit further north. Lee County is kind of smack dab in the middle of that. So just some stats on the area. One of the reasons why we kind of choose this, as Nicole was saying earlier, is that we look at the market, we look at something that's got a wide array of opportunity for many different types of investors. Some of the demographics that we look at here is in Cape Coral, the population currently is actually a little bit higher than this. It sits at about 200 and I think it's 206,000 right now. The pandemic kind of moved a lot of things up. I think a lot of people that were looking to retire, or they're moving their money from other metropolitan areas for the investment side, like California, Chicago, New York, where taxation and rental situations with tenants were a bit different. They've all kind of come down this way. So that number is a little bit higher, but 33% of the homes that are in our market in Cape Coral are rental homes. They were bought with the idea of either being a rental, or it was somebody who bought that house to retire in, and kind of lived through that. The family inherited the home, and then it became a rental at that point. We've also seen an appreciation in Cape Coral of about 59%. I think it's 59.4% over the last 10 years. Cape Coral, if you get a chance to see our property ebook, is primarily going to be in the luxury and A-class properties. A lot of waterfront homes, a lot of high-end rentals, and a different tenant base than in some of our other markets. Lehigh Acres, population's gone up. We're about 124,000 as it sits right now. Again, the rental market in Lehigh is very similar to Cape Coral. It's about 33%. 10-year appreciation, still fairly on par. The tenant base that we usually see in Lehigh Acres has been predominantly in the A, B, and high C class, which usually means a little bit lower purchase price, but cash flow tends to be a little bit better, especially when you have a great property management team watching over it for you. Fort Myers, which is kind of smack dab in the middle of Lee County here, has the largest population. They're at about 350 right now. And with that, they have about 37% of the homes are rentals, with a 10-year appreciation moving up around the 91, 92% range. So those are kind of the big three. On the outliers from that, for certain investors that look at different high-end luxury properties or high-end commercial, you would be looking in the Estero, Bonita Springs area. And then kind of the cream of the crop would be in the Sanibel, Captiva, and Naples area. Lot of oceanfront property in those areas. So yeah. Biggest reason that everybody comes to Florida, right? So they can hang out on the beach and, have a margarita or, get a sunburn. Some of the beaches that we have in our area, you got the Naples Pier, which is a strip of beachfront and beautiful pier. Restaurants are up at the front end of that. You got Fort Myers Beach, which is a kind of a spring fling year round. And then Bonita Beach, which is a little bit further up, White Sands. It's absolutely beautiful there. They have a bunch of trails to walk and nature hikes and things like that up around the Bonita Beach area. And these are just a couple of them. There's a smaller one in Cape Coral. You've got Captiva and Sanibel. And even right off of Cape Coral, you got Pine Island, which has beachfront and great fishing and a lot of good stuff out that way. So why do people invest, or why are people coming to the Southwest Florida market now? Water, weather, and taxes is kind of our tagline that's down here, right? Everyone wants to be near the water. Everybody wants to have great weather most of the time. And the nice thing is that taxes tend to be a little cheaper here, or a lot cheaper recently, than what it is in other heavy metropolitan rental areas. We're a very landlord-friendly state and remain that way even through COVID. Immediately after they lifted a lot of the bans and things like that, most tenants that would have caused an issue, we actually had very few, thank God, with our company. But most of the tenants were typically out within a 30 to 45 day range. Whereas we've heard some stories in other markets where it's been months and they weren't able to have a tenant moved out. Real estate market has been just growing and growing and growing since about 2011. Our average appreciation on our properties was sitting usually between 3 and 5%, starting at about 2011. When COVID hit 2019, we saw a jump of right around 13%. 2020 and 2021, we were in the 20s. I know in 2021, I think we were close to 23% overall in appreciation of homes. So that's what we looked at there. And then job diversity, and this has kind of changed as well since the market has changed across the nation. With a lot of our people that are moving here, and with the changeover to people are able to work remotely now, this has created kind of a surge of being able to have the best of both worlds. They can work down here. They have the space. The homes tend to be larger. The additional bedrooms that are on there are for that. But our biggest sectors down here are healthcare, education, hospitals, and everything. You know, Florida was a retirement state forever, right? That's what people think about when they retire. Um, but over the last 20 years, we've had a lot of growth in the educational side. Construction is massive. There are companies that are starting every day building new and unique products in our area. And then obviously tourism and hospitality plays a big part, right? A lot of people come to Florida to vacation, to have fun. So that side has always thrived down here. And so, like I said, we've had very, very robust activity throughout the entire state of Florida. It's kind of been centered on our area. And the nice thing about where are stationed at is to the north of us, and about a 2-hour drive, you've got Orlando and Tampa, right? So people come for the theme parks and all that other fun stuff. And then you got Miami a couple hours south of us. We're right in the center of that to where we can get to them and have a good time, make a weekend of it. But we're far enough away from the hustle and bustle that we don't have to deal with it all the time. Our population, like I said, because of changes throughout the country, our population is steadily growing through all parts of Florida. New jobs are being created weekly. Lee County, which is where the center of most of the transactions that we see are, is a very business friendly area. And what that means is that we see a lot of people who are able to start their businesses, whether it be in subcontracting on things, new hospitals, new franchises that are coming to the area regularly. All of these things just keep piling in. I'll talk a little bit about the Pine Island corridor, which cuts right through the north and south of Cape Coral. And for years and years and years, up until about 3 years ago, it was just a solid strip of land. Now that's kind of the dividing factor, and nothing but new businesses are coming in that way. As it sits right now, there's definitely more demand in our market than we have been able to supply. And what I mean by that is that because of the amount of people that are coming in, new construction has had to kind of stabilize how quick they release the homes, as well as efficiently build these homes so people aren't waiting 12, 18, 24 months to have these properties built for them, especially on an investment side. We've got a couple of builders in our market that are building out for our investors in anywhere between 3 to 6 months. And it's because of the way they've developed their business through that. So we do see about 1.3 million annual visitors, just visitors, to our market in Lee County. And we look at about $1.2 billion spent just on that. And a lot of the people that I talk to when I go to restaurants or I'm out at the beach or whatever the case may be, a lot of them have been saying the same thing. You know, we've been visiting or we've been renting a vacation rental down here for the last 10 years. Now we're in a position where we're buying. We don't want to be up in the cold, or we don't want to be in the political climate of where we're at. So they're all coming down here. Yeah. Current job growth is about 2.8%. So the amount of jobs that we actually have in the area it raises about 2.8, while labor force is only growing about 1.6. This is happening primarily due to a lot of remote workers that are here. But that also means that the ability to get a job here in just about anything is relatively easy. Great for our tenants, especially that are paying rents. If something happens, they can usually recover quickly. GDP of our area is about 35 billion, and it's grown about 60% over the last 10 years. So we've had huge growth there. And then Cape Coral in Southwest Florida was recently ranked, this is a big one, by Forbes as one of the best places for jobs in the US, and one of the best places to live as well. Unemployment rate in the region is about 3.4. I think it's actually a little bit less than that, and that's more of people not going to get the work that's out there because everybody's hiring. Every store you go to, every business that's out there is, hey, we want more people. Um, excuse me. So we were talking a little bit, or I was talking a little bit earlier about the Pine Island Road, right? Pine Island is kind of the division between North and South Cape. If you're looking at an overhead of Cape Coral, you can really look at, we're divided into 4 quadrants. You've got Pine Island Road, and which is north and south, and Santa Barbara Boulevard, which divides us east to west. But Pine Island, for the longest time, has been a ton of acreage that's just been sitting there. As North Cape has continued to develop very, very rapidly, first with the boom back in 2004, 2005, and now, again, we're looking at a lot of growth. There's just not much land south of that anymore. We, as a city, needed to make it so businesses were available, whether it be shopping or restaurants or things like that, so people weren't trying to travel the entire city of Cape Coral to get to a restaurant. Cape Coral is the second largest land-wise in city in Florida, second only to Jacksonville. Sorry, I had a skip there for a minute. But all the businesses that you see coming in here, the big reason to bring up all these businesses coming in is that one of the demographics that a business looks at when it's coming into a place is population density. Is their client within a certain range of where they're going to be? And so that's why you see all these businesses underneath that are coming in. Walmart's, Targets, they're kind of everywhere. Starbucks is another one that's kind of everywhere. But some of these other ones look at population density of a couple of miles having 70, 80,000 people within a certain mile range. So just kind of shows you where the build out or where the density is coming from. In Forbes, we were listed as the hottest housing market in Florida. It's a great article that we have. If you reach out, we can get you a copy of that article where it kind of talks about that side. Yeah, we're at 209,000 as of 2022, and we're growing. We're still growing, right? I've lived here for 22 years myself, and driving down the roads are getting to be a little bit more hectic than what I'm used to. So the Cape Coral metropolitan area is one of the nation's job growth leaders. We talked about it. It runs third in the nation. Cape Coral in itself is about 120 square miles. It says third here, but I actually think we're the second. Typical home values of homes right now through the ZHVI. If anybody doesn't know what that is, that's a Zillow Homes Value Index. Average of homes right now is about 386, 694. Over the past year alone, or 12-month window, we've seen an increase of about 44%. Pretty much if it gets listed, it gets sold. We've kind of pulled off a little bit from the you list it and 3 minutes later there's 32 offers on it and people are offering cars, and I saw one where the contract said they would buy the seller free pizza every Friday until they closed on the home in order to get them to say yes. So it's a little bit less than that, although homes are still selling at or even above the market. I say market price, but the purchase price. Lehigh continues to jump. A lot of that has been the necessity of lower price homes, and Lehigh in itself is not a lesser quality home per se. It's just cheaper to build out there. The land's a lot cheaper out there. The properties can still cash flow even on new construction homes. Christopher Allen and some of our other major builders are starting to build a lot out there. Rental rates are a little less, but there's usually a $50,000 to $60,000 difference in price point between there and Cape Coral. So Lehigh Acres is in the top 10% nationally right now for real estate appreciation, or the value of the home after you buy it going up. We were talking about the ZHVI just a second ago. So We gave the average at that point. In Cape Coral, it's about 393. In Fort Myers, we're looking at about 351, and then in Lehigh, as you can tell, there's about $100,000 difference. Lehigh is about 289. They've all gone up. It's just closer to the water you get, the higher the value of the home is. So these are some of the builders that we work with as a business here, and they all kind of service different types of needs for what we have. So Lennar Homes builds both subdivision and non-subdivision homes. Most of what they do is in subdivision, which is why you see such a large count. As they've kind of got the rush of people coming into the area, they have added more communities to that. So they build those in phases and in bunches. That's why you see as many there. D.R. Horton, kind of the same idea as Lennar Homes, build a similar product. 3-4 bedroom homes in the community style. They've had a few of them that were very large communities that they've been phasing out over the last 5 to 6 years. Pulte Homes is another one. They build primarily in non-subdivision areas. They have a couple of them, but they're smaller. Brooks and Freund does a lot of your multifamily and commercial building in our area. So when we're looking at units permitted and that side of it, they build like 393 unit multifamily places or commercial strip malls, other thing, warehouses, things like that. And then JHS is one of our builders in the area that I actually do quite a few sales with for my investment clients. They build a very solid investment friendly home at a reasonable price point, and these properties rent just as fast as we close on them. So we play that side. They also build in about a 3 to 6 month range. Lately, it's been right about 4.5 months when they close. I've got a couple under contract with them now. So I think there may have been a miss it here. So we're looking at about 33% of homes are rentals. The average population growth for us has been 5.6% year over year. Vacancy rate currently runs at about a 1.6 in single family homes and about 3% in multifamily. It's not uncommon to have 1 or 2 people, if they're vacating, moving somewhere else, and then to turn those units and put them right back in. Rental income group runs anywhere right now between 33 to 99,000. And our rental rates for most homes sitting at 1,250 to 2,000. New construction has actually pushed up over that in the last few months, some of which are in 25 to 3,000. And this also doesn't take into account some of the luxury homes that are in the area. So the average household size for us down here is 4 people in a home. I think it's actually like 4.2. I haven't figured out how you get a 0.2 of a person in a home yet, but the average household size is 4 people. Median age right now is 48.8, and that's something that's relatively, or that's significant to kind of what we're doing here. Remember, Florida has always been known as kind of a retirement state, right? So 20 years ago, Cape Coral, the Lee County market, the average age group was about 60, or the median age was about 60 years old. As those people are moving into homes, facilities, moving in with family, we're seeing a lot of younger families come into our market, and it's bringing the median age down, the need for schools and education and things like that. Right now, our fastest growing age is about 25 to 34. That's our fastest growing age range, while the declining is 65 and older. We do see an average rental. Pre-COVID, we saw an average rental increase of about 3.7%. It's actually been much higher than that over the last 2 years, as we've gotten such a rush of people that have come in. So rental rates have significantly jumped on that side. Most popular bed and bath right now bed and bath mix is a 3.2, regardless if it's single family or multifamily. Now we are starting to see a very quick increase for those looking for something with either a den or an additional bedroom. Not because the needs for an additional room for a family member has changed, but to bring in an office so that the family is able to work in a remote setting and kind of separate themselves from the house. The biggest upgrade requests that we typically look for when you look for houses in this area, garages. Long time we thought they were always a guarantee. It wasn't. Some people have gone to kind of an open plot living, even when they do their lanais and pool areas, to actually an open space out there. Fences, because everybody loves the privacy. Pool, you're in Florida, everybody, at least everyone thinks they want a pool. That's I guess the big one. Everyone thinks they want a pool, but they usually get it, they enjoy it for 2 weeks, and then it's just something that they have on their property. And then pet friendly. I will say, because we're very much an outdoor state, being pet friendly is huge in our area, and I guess that kind of falls into where the fence comes in as well. So again, Southwest Florida, we have been ranked as one of the best U.S. cities to start a business in, and to grow that business. We've talked about our weather right now. If you can see it, it's about 80 degrees here, mostly clear skies. And that's pretty much the weather, short of our like 3 to 3:45 afternoon shower we get every day to keep the grass green. It's sunshine most of the time. Taxes tend to be lower. Entertainment options, I mean, that's kind of the sky's the limit here, whether it's the beaches or heading further inland for camping trips, theme parks, vacation to the Keys. That's always a fun place to go. All of these things are kind of things that you're able to do, and you're close enough that you can do them on a weekend. I mentioned earlier, we're located between a lot of the big metropolitan areas, places like Orlando and Tampa and Miami, where a lot of people come down. We're also, if you go a little bit further east, you can get to West Palm Beach and places like that. So we do not have a state personal income tax. Always nice to get to keep a little bit more of your money. We have no corporate franchise tax on any of the capital stocks. No state level property taxes assessed. So it's levied just on usually city and potentially county if it's a piece of property that's county driven and not city. No property taxes on business inventories. And then we have no sales tax on manufacturing machinery and equipment in our area. Unemployment rate of 2.9. We've talked about the job growth in Florida. And then the highest sectors are medical, construction, teaching, and hospitality. Stays true pretty much year round here. Construction is never really going to go. While it may get a little slower from time to time, it typically has always come right back. Teaching is a big one. So we actually, down at the bottom, you'll see it says we have 109 public, private, and charter schools just in Lee County for all age groups. That includes some Christian schools. The charter schools are becoming really, really big here. Some of the like the Academy of the Arts and things like that, which has a little bit of a different teaching plan that what you would see in a standard public school. But they had to, because of the amount of children that were coming to the area with their families. They needed that, right? We have about 47 miles of Gulf beaches in Lee County and 400 miles of canals. Before Cape Coral was Cape Coral, they dredged out, we had a lot of marshland that was here, and what they wanted to do is, the idea of the people who did it was to dig all these canals out and everything so everybody could have a little bit of waterfront property to live at and to call home. So all these canals were put in back then, and it helped to kind of drain the water out of Cape Coral and give us a place where we could build this beautiful city. So third in nation for a small business startup. It's very, very common here. We've talked about the no state income tax and the lower property taxes than what we see in some of our other high performing rental markets. A location has been talked about, and then obviously the weather opportunity and taxes. So cash flow and appreciation in Southwest Florida. Some of the ways that we kind of break down which area you would want to look at and how we kind of connect you with certain markets based on your needs as an investor, right? We're going to look at a couple of them. So we've got in Cape Coral. Cape Coral is pretty average. We look at Lux, A class, and B class for some of our older properties. Typically an average appreciation rate of about 3 to 5%. North Cape has actually gone higher recently, primarily because of the utility expansion that's going on out there and because the cost of land is lower, so the build cost is lower for those homes. And so as the utility expansion comes in, as they build up the commercial corridor on Pine Island, you're going to see that appreciation number climb higher. It's a great property or a great idea for somebody that is looking for long-term buys or hold investors. It's not really big on the flip market in Cape Coral, not that we can't find them, but it's not as big in Cape Coral. The median income for the renters that are here is higher than in other parts of Lee County. Rental increases, again, we typically see 3 to 5% annually. And the maintenance cost is lower. The tenant base is a lot different than in some of our other like sub pockets, right? If we get hyper local, tenants tend to take care of their home, right? And the people that are usually renting, especially at the rental rates and things like that, are renting for 3 to 5 years because they're going to be a homeowner. They look at a property differently than somebody who's going to be a lifelong renter. So again, these are great for long-term investors that are looking for properties, or 1031s from more expensive areas, because these properties, as it builds up, is just going to keep getting higher and higher in appreciation. Fort Myers is kind of the mix of our area, so we see a lot of A, B, and C class properties. You can kind of pick and choose as to what you want on that side. Appreciation is a little bit lower. It's been about 2 to 4% on average. As you get further south, that number does move up, right, towards Estero and Naples and things like that. Fort Myers is kind of unique in the idea that you have markets within markets within markets. So you kind of radiate out from these pockets that were originally built in Fort Myers. It's been around since about 1891, I think, is when Fort Myers was established. And they'd start in small little places and spread out. That's what we have there. So we can pretty much find everything you're looking for there, whether it's a long-term buy and hold, whether it's flip properties, whether it's multifamily, commercial, even land. You can get into the north parts of Fort Myers and find properties where people will have cattle ranches and things like that as well. So it's really, really wide through Fort Myers. It has the largest income range for renters, and that is everything from government assisted renters and Section 8 and Section 42 programs, helper assistance programs, all the way up to people that are renting on the water at $8,000 to $10,000 a month for some of the homes that are out that way. So it's just a massive range. It makes it really easy for investors to kind of find exactly what they're looking for. If they have an idea on a number, you can usually find properties that are going to match that. So yeah, so Fort Myers is great if you're a little unsure of what your goals are, or if you're trying to get a really well diversified portfolio. Fort Myers works great for that. Lehigh Acres, the average property rating usually is in the B, C, and D class, so a little bit more on the lower end on that side. Appreciation has been slower, although it's coming up in some of the pockets there. And Lehigh is primarily cash flow investors who are able to keep a really, really keen eye, or have a property management company that can keep a really keen eye on maintenance control with proactive maintenance programs. I started with this company as a property manager, and that is probably one of the biggest things. The numbers will make sense. but a management company that's keeping an eye on it and making sure that you're proactive, that filters are being changed out, that leaks are regularly inspected for. Things that may not be seen are inspected. We try to look at it once, twice a year in order to make sure those things are there and encourage our tenants to notify us when there's an issue. The income range out there tends to be the lowest. And what happens a lot of times in Lehigh, while it's still very, very easy to rent out there and rents are climbing, as Cape Coral and Fort Myers rents have gone higher and higher and higher, it kind of pushes people to the outskirts of the county. This would be where Lehigh Acres has stepped in. So there's still a lot of opportunity out there. And then as the markets in Fort Myers and Cape Coral become really, really saturated, you'll start to see Lehigh Acres build up at that point. Saturated meaning a heavy density of people. So we actually have a market data packet that will kind of go even more in depth than what we've kind of talked about tonight, or more that I've shared with you. If you just keep that link down at the bottom, it's marshallreddick.com/Cape Coral. You can pull up this packet and take a look at it for yourselves. Any questions that you have, by all means, reach out to Nicole, and she can kind of touch that base with me or with you. And if not, she can pass it on to me, and I'll be more than happy to talk with you guys as well. So this right here kind of gives us a little bit of statistical data, more the numbers for the guys and girls, for the investors that enjoy this. So if you look down at property classes, initially you'll see where we go kind of luxe or luxury properties, where their value at, and then A, B, C, and D, it kind of as a sliding scale. Depending on what your goals are, whether it's cash flow, appreciation, whatever side that may be, will depend on what side of that scale you're looking at investing in, right? If you're 20, 25, 30 years old, if you're a younger investor and you're looking at retirement, you may be looking at trying to find higher end properties that are going to give you that money throughout the sale at the end, or 1031 into something bigger and bigger and bigger. Whereas if you're in the older side of the investment side, you may want that money just so you can go out and enjoy life and not have to worry about bills or things that are coming up, right? You get a solid cash flow coming to you every month. This is how we look at it and where our price ranges are for that side. On the underside of that, that's looking at it more at a multifamily, what you should be looking at per door in order to purchase there. The chart directly above it, we show an appreciation trend of 3.93%. And so you see kind of the years down at the bottom where we had that bubble come up, right? About 2005, 2006, it stabilized and then it kind of dropped. And we've now, as of 2010, 2011, we have skyrocketed up until now, where that thing's almost pointing straight up, right? So big market on the side right here, it'll tell you where appreciation is sit. So what we had is the kind of the predatory lending and the falling through 2006 and 2009, and then it sprung back really quick in the 2013, 2014, and 2015, slowed down just a little bit, and then COVID hit and it jumped right back up again. And it continues to climb. All right, so here's my favorite part of all of this, and this is kind of where we look at some properties that are in the area. And so there's been some recent changes to interest rates and things like that. So we're kind of looking through this side of it, and that's why you guys have us here. So looking at some of the properties that we have, and this is an example of, on our website, if you're going and you're looking at properties, what you're going to look at. What you're going to actually be able to pull, the data that you're going to be able to have in there, as well as go in and kind of play with the numbers a little bit, right? So this property right here is a new construction home. It's 1,683 square feet of living space. CO on these right here, this is if I'm not mistaken, this is a Holiday Homes build. So CO is usually in the 6 to 8 month range on them right now. But this property right here currently listed at 399.9. If we're looking at a 30% down payment, you would see 119,997 to purchase a home. Initial repair costs, even on a new construction, we tend to put this number in. That's primarily used if there's any upgrades or renovations that you want to do or that may be recommended as we kind of go through it, such as not all of the new construction builders will put in ceiling fans. They'll have lights, but no ceiling fans. A little weird, I know, but they'll have that. Or they may not have a screened-in lanai, and there's obviously a cost to do that. A lot of us, we only have about 2 weeks in August where the mosquitoes get really bad, but nobody likes them. The love bugs is the other one down here. So you're looking at investment capital of 130,000. Rents on this property right now run in at about 2,200 a month, and then we're looking at a mortgage payment at our average today. Interest rate is about 5.5%. Taxes, insurance. So these are all the fees that we kind of consider when we're purchasing a property. Fixed monthly expenses. We look at 2226.69. So this is where it gets kind of interesting here, is that we're looking at this solely as a cash flow or no cash flow property when you look at it from here, right? You'll see your return and everything at the bottom is still at the 11% on the money. Monthly income at this point is showing a negative 26.29. Once you factor in depreciation on the property, the other tax benefits with owning a property and what you're able to do for any repairs or interest that you're able to claim off taxes, that number grows significantly. This is speaking solely from the property standpoint. We assume that there's going to be 5% of the rent's going to go to maintenance. That may or may not be true. New construction, you tend to see very little maintenance. But in the event that in 3 years you have a repair to do, that's where we look at that. Vacancy, we look at 8% of the rent. Truth be told, in our markets right now, if a property is vacant, it typically re-rents within a week or two, assuming any repairs or anything have been or that need to be taken care of, or if they need to be taken care of. Once it's rent ready, it's got a line of applications on it. And then the leasing fee, which is 50% of 1 month. We split that over 18 months. Most tenants typically stay for 3 to 5 years. So that number is again, these are kind of the ghost numbers on that side. At a 15-year projected profit of, so over and above what you pay for it, you're looking at 223,560, and that's what we're looking at when we consider the depreciation and tax benefits and everything else added into it, or an ROI of about 11.4%. So this is, again, all this information will be, if you go on our website, you can play with the numbers. If you're like, cash flow is really important and I got more for a down payment, obviously that can change that. And we tend to stay very conservative when it comes to the actual rents on the property. We would rather over deliver to our clients than under deliver. All right. So this right here is from, this is actually one of the homes from the JHS builders. Again, we'll look at 3.5 for appreciation. This is a 2022 3-bedroom, 2-bath, 1,600 square foot home. They run very, very similar. This is the one that's very much investor friendly. List price on this one is 389.9. So we'd be looking again down at 116, gives us the capital that's needed at 128,022.55. Gross rents on this particular property, especially with a 3-car garage, is going to be a minimum of 2,400. Once we figure everything in at that point, once you've pretty much paid all your bills and everything for the property, you still got additional income coming into your pocket. And then at the end of looking at it from an appreciation standpoint and everything else is great, but this is something that's just going to pay for itself and grow in appreciation. Looking at a 15-year projected profit of about 224, and we're up to almost 11.7% on this property in today's market for an ROI on your money. right? Which 10% of your money is doing great. I don't know if anybody's into the stock market right now, but I am, and I'm not overly happy about it right now, right? Um, so this is a property that's up in one of our sister markets. We do work through this market, and it's a very unique build. This is a steel and concrete construction home. So they steel frame it and use ferro concrete throughout, which you can see some of the cool pictures, and it's well done inside, very energy efficient. Um, but the cool part of it is on the back of the house, there's a ladder that, or not a ladder, but a stairway that goes up to the top of the rooftop terrace. That's got full AstroTurf and everything else. It's kind of like an additional 1,800 square feet of space where you can go up and relax and enjoy the Florida weather. So this one currently is much lower, right? So we're looking at 329.9. If we look at a down payment of 25%, looking at about 94,000 all in when this property closes out. Rents sit at about 2,300 for this property. So you're looking at a monthly, after everything is paid and done, taxes, insurance, and all that fun stuff, is going to be at 205.03. The 15-year projected comes in at about 216, and this gives you, instead of being at that 11, 12-ish percent, this is your return on investment at this point is much higher. It's about 15% or just over 15% on this property. The uniqueness of this type of property is what's allowing them to rent as they do. Just because a lot of the younger renters that are working remotely and things like this house is perfectly designed for them. All right. So again, our website will kind of give you the ability to go look at some of the properties. The realtors and advisors that are down here in the Florida market, we handpick these properties to put them out there so you guys can kind of see what's out there. And while they do move very quickly, if we have an idea, if you came to me and said, hey, I love this house, I want to buy one that's like this, or I want more information on a house like this, the builders will always build more. And so we keep our eye out. We have relationships with a lot of their offices, so we can say, hey, when this one comes up, give me a heads up. And they kind of push it out our way from there. All right, so we've covered the website. We've kind of covered what Florida as a market looks like. Some ways that you can kind of build depending on the type of investment strategy you have, whether it's a long-term hold, whether it's flip, whatever the case may be. One of the other facets of our business, like Nicole said earlier, is we handle both. So we don't look at properties just going, great, we want to sell properties to people, collect the paycheck and go home, right? We have built in a fail-safe for all of our agents, myself included, and that's our property management side, right? The property management side keeps us honest because, again, if we end up setting you up with a bad property, right, through things that we could have changed, we're probably not going to be working for a company like Marshall Reddick for very long, right? So we communicate regularly with our PM staff, and the way that it's designed is it's kind of split up we've got property managers, we've got 2 teams right now, as well as help from some of our other offices from a central location. But we've got 2 property managers and their teams, which include leasing agents, maintenance managers, maintenance coordinators. All of these people are working on a very specific part of managing that property for you, right? Keeping it ready, keeping it rented, keeping the tenants happy, keeping obviously the client, you guys happy. And so we do it, and we're set up as a very simple fee structure in order to kind of say, hey, this is what it is. There's no admin fees for having to do a work order. There's none of that stuff. What we typically look at for the management side is very simple. We do a 150 renewal fee per renewal that we do. Tenant late fees, we chase it. Once we collect it, it's a 50-50 split, and that's a big one to put out, is that you're still getting additional money, and we're doing all the work. If we don't collect the money, we as a company, we don't get paid, right? So if an eviction's going through, the time that we get through, it's in everyone's best interest, yours and ours, to make sure we can remove that tenant and get a high qualified paying tenant into that home. There's absolutely no setup fee for our management. We will set up all of the documents required for us to successfully manage it. We don't do, and I talked about an admin fee earlier, which is very, very popular with the PM teams that are down here. That's a maintenance coordination fee. Pretty much a tenant will call them and say, hey, my toilet's leaking, or hey, my air filter's dirty. They will call an AC company, the bill goes to the PM company, they add 10, 20% over the top of it and send you the bill because they had to make a phone call. We do not. We set it very, very simple to being, hey, this is what your bill is. The same bill that we receive from a vendor gets sent to you. In the event that it's something over a preset limit, we do contact the owners first. We do gain a couple of bids through vendors that we've gone through, and we know they're licensed, they're insured, they're bonded. They've done work with us in the past. And the same thing when an eviction happens, right? We set up all the coordination and everything for that. We charge nothing to you on setting that side up. There are attorney's fees, but we don't charge for the services that we provide on that side. And then our management fee structure is very, very simple. So it's always on rent collected, meaning if you have a vacant unit, no payment. So single family condo or townhome is an 8% fee. If you purchase a 2 to 4 unit building, still at the 8, but once you jump over that 4 unit building, if you're looking at commercial, multi, or even commercial properties, 5 to 15 units drops down to 7, 16 to 29 units drops to 6, and a 30 plus unit building drops all the way down to 5. Makes a big difference door to door to door. All right, if you have any questions on the property management or PM side, feel free to reach out to us. We'll be more than happy to kind of talk about all of this information with you and go a little bit more in depth as to how we cover the properties and the markets that we handle here. We're gonna move forward. There we go. All right, and so at this point, you guys are probably tired of hearing me talk. So I am going to send this over to back to Nicole and let her kind of finish out with the rest of the presentation.
Thank you, Jerry. The page we have right here, this is our Reddick Property Rating ebook. This is a really informative handout that kind of explains the different, you heard Jerry talking about A class, B class, C class. This goes into more detail about that. Again, you can find it on the website. You can always email me and I can email you a copy. Let's go to the next. And then this is what can you expect from a consultation with an advisor. So I'm one of the advisors here at Marshall Reddick. All of our advising is completely free. There's no charge. There's no membership fees or anything like that. But if you'd like to have a consultation and talk with an advisor, I'll be following up with everybody with a phone call over the next couple of days. Also, if you had any questions that you didn't get answered, you can email me. But again, on one of our advisor calls, these are the things that we talk about. We talk about goal setting, like why are you investing? What are you looking to get out of it? And then we evaluate your options, talk about time frame, what are your investment criteria? And then I help you identify, the markets that would work well for you. And then again, introduce you to all the key players that will help you execute your transaction. And then you will find us all over the website, all over the internet. We'd love to have you connect with us. And then here's my contact information again. If you have any questions that you didn't get answered, here's my email, nicole.fisher@marshallreddick.com. Or if you'd like to set up just a complimentary consultation and talk a little bit about what you're looking for or how we could help you specifically, definitely you can email me as well. But again, I'll be reaching out. And yeah, I think that's it for the evening. Are there any more slides? Nope. All right, well, thank you so much, and everybody have a good evening.
Thanks, everybody.